really describing is the denominator breaking down. The measuring stick is getting shorter. So then everything that you measure with it looks taller, right? History's full of examples of this, all right? And it's examples of what happens next. In ancient Rome, the silver content in their coins dropped from nearly 100% silver to less than 20% silver as the empire debased its currency to pay its debts. Now, people back then thought the same thing. They thought they were getting richer. They thought they had more coins in their hands. But the coins themselves were worth less and less and less. During Weimar's Germany hyperinflation, stock prices, nominal wages also exploded higher. But in real purchasing power, they collapsed. People carried wheelbarrows of marks just to buy bread, while charts on paper showed that they were growing, showed they were getting rich. And today you can see the same dynamic in Argentina. Last year, inflation ran over 200%. Prices tripled. Salaries double. And yet somehow everybody still ends up poor. That's what a falling yardstick looks like in real time. So when you see record high markets in dollars, but stagnant wages and crushing cost of living, it's not a paradox. It's the textbook example. It's the sign of a yardstick that's losing integrity. So the question now isn't whether the dollar is weakened, right? The data already tells us that. It already proves that out. The real question is, what happens when you start measuring in something that isn't melting? What happens if we get another yardstick, all right? That's where the illusion completely breaks. Now, before we get into that, have you ever wondered how the U.S. can run trillion-dollar deficits every single year? You know, spend more than it earns, print money like crazy, and yet somehow the dollar never seems to collapse? Well, it's because the system isn't built on productivity anymore. It's built on something else, something I call the imperial carry trade. Here's how it works. For over 80 years, the U.S. has issued the world's reserve currency, the dollar, right? That means everyone around the world, governments, corporations, banks, they need dollars to trade, to borrow, to save. And that privilege, it gives the U.S. an almost unlimited credit card. Now, according to the Bureau of Economic Analysis, last year America ran a current account deficit of about $1.13 trillion, nearly 4% of GDP. That's money flowing out of the country to pay for imports, for military bases, for foreign investments, and interest on the debt. But because the world uses those dollars, they come right back in. Right? Foreigners recycle them by buying U.S. assets, by buying U.S. Treasury bonds, by stocks, by buying real estate. Now today, foreigners hold a record $9.1 trillion in treasuries. Japan alone owns more than $1.1 trillion. The UK recently passed China as the second largest holder.